Stocks continue to smash through record highs, powered by strong earnings and AI hype, but with tariff deadlines looming and crypto taking risks and whispers of inflation stirring again, could markets be quietly signaling what's next to come? Here's what you need to know for the day. So overall, stocks open up pretty positive on the day, reaching a new record high for both the S&P 500 and the NASDAQ. The Dow's kind of lagging a little bit, but let's ignore that a little bit because what's really powering this rally are tech earnings. And what we see is that 83% of S&P 500 companies beat on earnings, and this is important for the longevity of the higher highs that we're seeing in these markets and whether or not that lasts. And with new market highs being hit daily, it seems. Great earnings so far, AI optimism, the build back of this belief of the idea of the great taco. There's a lot of bearish investors that are believing the market will eventually fall. Well, these bearish investors, if I'm skipping a few steps ahead and you don't understand, are people who think the market is going to go down and crash, and it's going to bloody burn. Well, with what we've been seeing in markets lately, a lot of people are beginning to second guess themselves as to whether or not that actually happens or not, leading them to this growing itch of FOMO or fear of missing out. Like, man, I'm like sitting cash on the sideline, earning little to no yield. Like, yeah, you could get 4% risk-free in CDs and certain types of bonds, but that's nothing in comparison to what you could have earned just sitting in being invested into the market. So it's leaving a lot of people puzzled about whether or not they were wrong about their forecast for another market correction here pretty soon. And then let's pull up some other charts real quick because this was the star of the show. So we got Bitcoin, we got Ethereum, and let's pull up XRP. So what we've seen today is that altcoins really rallied for the day. We had Ethereum really showing out and it sold off later in the day. Let's put it on a larger chart so you could see. Yeah, boom. And then Bitcoin's already reached new all-time highs, so it makes sense that this lagged back a little bit and didn't share as much of the rally. But it appears that this risk-on trade regarding crypto surging higher is mainly after the successful crypto week we got last week with legislation making way through to the Congress. We had the Genius bill pass regulating stable coins and further insulating crypto into the financial space here in the United States. So that's seen as super good news and everybody's wondering, all right, well, what's this mean for certain cryptocurrencies? And we're starting to begin to see investors pile into these crypto assets. Trump shared a video on his Truth Social yesterday giving a definition of what Bitcoin was. And I see it as really a shout out to Bitcoin and possibly the entire crypto market, because Bitcoin is a cryptocurrency, but cryptocurrency isn't Bitcoin. And when Bitcoin goes up, similar to how like big tech, like the Magnificent Seven or even Nvidia stock, when it goes up or down, it's big enough to move the larger, they say a rising tide lifts all ships. That's the same with Bitcoin. So a lot of people see that as a shout out. And MicroStrategy also scooped up some more, bringing their total holdings of Bitcoin up to 3% of circulating supply of Bitcoin. So overall, I see that as a huge win for crypto and this crypto risk on trade that's going on. But there's still this big question mark around tariffs. Do they stick? Does taco really exist at the end of the day? And we don't know what could happen out of that, but there is some pieces of this puzzle that we do get, and we can make guesses based off of it. But what we are seeing is data and firms' responses. And what we see is that Amazon is one of the many companies that are deciding to raise prices, where prices increased as a result of tariffs, raising by around 5.2%, while Walmart lowered costs by nearly 2% on some of the same items in comparison. So that's just some of the data we're getting in as far as the impacts of tariffs on these larger companies. So Amazon's raising costs, Walmart's trying to be that low-cost competitor and be competitive in their lowering costs. And a lot of their stuff's in-store traffic, although they are building that online marketplace just like Amazon is. But Walmart's still a money printer where the customers are able to come pick stuff off of their shelves, pay then and there. They don't have to pay to like deliver it and all the delivery drivers and whatnot. That's a lot smaller percentage of Walmart sales. But it doesn't end there, because we also got toy makers aren't doing too well. And this is all relating to that same T word. And I'm not, kind of Trump, but tariffs. So let's go through this one. The outlook for the rest of the year isn't rosy for toy makers. Roughly 60% of toy makers have executed layoffs in the past 2 months. Steep tariffs on goods from China, as well as Southeast Asian manufacturing hubs such as Malaysia, Indonesia, and Vietnam, have eaten into margins and led some companies to cancel holiday season orders altogether. The inflation rate for toys, games, and play equipment rose 2.2% between April and May, marking the sharpest monthly increase the industry has seen in 4 years, according to the data from the Toy Association. Retailers are responding to the uncertain environment with caution, delaying purchasing decisions, avoiding riskier new product launches, and focusing their shelves on proven legacy brands rather than experiencing with novel offerings. So pretty much, to sum this one up, we're going to stick to what's been working, and we're not going to try out the new stuff yet. We're going to wait until we're in a better market for that. The Toy Association is actively lobbying the Trump administration for tariff relief. So it's almost like they're begging, please stop, you're hurting our businesses, and they're the ones absorbing the costs here. And I mean, to an extent, consumers are tapped out. Yeah, the economy's holding up. Yeah, consumers are still spending, but they're spending more cautiously and they're shopping for deals. I just walked around the mall today and I'm like looking at everything like 50% off, and I'm like, 50% off, and it's the whole shelf of jackets. Let me check that out. Oh, well, that's why they're 50% off. They're still high with the 50% off. So it's looking a little rough out there. But the story doesn't stand there, because aside tariff inflationary forces, there are other factors driving costs up, like weather. Weather has an impact on food and food costs. That's like the number one thing we need as people, is to be able to eat, to live. So extreme weather events are driving short-term surges in food prices around the world. Staple foods, including potatoes, rice, onions, lettuce, and fruit, are being hit by price shocks. The spikes are linked to heat, drought, and heavy rainfall conditions. Rising food prices are the second largest effect of climate change that people see in their daily lives, only exceeded by extreme heat. So it's way up there on the scale. Last year was the hottest year on record, and with that, unprecedented weather conditions and further price shocks are expected to continue going forward. The knock-on effects of food price spikes muddy the outlook for central banks as increased costs raise headline inflation. That's the thing the Fed's been fighting for a while. So when costs go up, the rate at which costs go up, inflation, that's what the Fed doesn't want. And it makes it more challenging to deliver monetary stability, which is the Fed's job, monetary policy. Price shocks could also exacerbate a range of health outcomes, as low-income and even middle-income households are both struggling right now. It's really those high-income earners, although the high-income earners in those white-collar jobs are where we're seeing a lot of the layoffs right now. They're still good financially. The low-income and the middle-income households cut back from malnutrition to diabetes and many types of cancer as a result of not getting all the vitamins and nutrients they need from their food, because they're like, oh, well, I can't afford that, so I'm going to cheap it out a little bit longer. And like after month and month and month of doing that, like that takes a toll on your body. But giving the environment what's expected to happen, we don't really know, but we get data based on this, and it's called the leading economic index. And this is more of a predictor. So we got the leading economic indicator index from the conference board today, and it showed a decline in June of 3.3%, falling to 98.8, slightly stronger than the expectations we were expecting to come in at. They were expecting a decline of only 0.2%. But over the first half of this year, this index has dropped 2.8%. And what this reading today suggests is that the economic slowdown is expected to happen. So we're expecting a possible R word pretty soon. But in this R word's recession, don't like try to cancel me or nothing. But this is only a prediction of what people like think could possibly happen. This thing shot false flags before, where it said one thing and that one thing didn't necessarily happen. So take this with a grain of salt. But a reading under 100 forecasts a contracting economy rather than an expanding economy. Now, I think of this R word, and the R word is dependent on the T word. So recession is dependent on what's going on with tariffs. And we're hoping to be getting tariff deals, and we got this deadline coming up, and this deadline for August 1st tariffs to start is right around the corner, and here's what we got regarding the deals. What they're saying, and they've kind of doubled down on this, is that, hey, I know we promised 90 deals, 90 days, but quality over quantity, y'all. Y'all didn't want us just like signing up for some stuff that didn't make any sense. So this is our honor to the country. We favor quantity over quality. So we're more concerned with high quality deals than getting these deals done by August 1st, Bessent said in a CNBC interview. Our trading partners were told that the rates could boomerang back to April 2nd levels, and some even argue that some of these levels we're seeing today that's supposed to go into effect August 1st is already higher than the April 2nd Liberation Day levels. We can continue talking to them, but again, we are proceeding apace with the negotiations, but we're not going to rush for the sake of doing deals. On the other hand, U.S. Commerce Secretary Howard Lutnick described August 1st as a firm date in an interview on Sunday with CBS News. That's a hard deadline, he said. So on August 1st, the new tariff rates will come in, but nothing stops countries from talking to us after August 1st. But they're going to start paying the tariffs on August 1st. And I'd imagine this will bring in some type of urgency. So like now it's set in stone. It's now reality for some of these countries with these high rates. Now they're going to come to the table and negotiate is probably what the White House's approach is here. And I'd imagine a lot of these countries aren't blind to that. And some see more harsh announcements before the deadline. And we don't know if that's the case or not, because we could see more harsh deadlines, more harsh tariffs, announcements from President Trump, while others are seeing him like completely delay some of these deals to be made, like the European Union, for example, who's a super tremendous trading partner to the United States. So there's almost an incentive to kick the can down the road a little bit with maybe European Union, China, maybe Japan to some extent. So some of these larger trading partners maybe gets a delay is what some people's forecasting, while others are seeing more harsh announcements before this deadline to really get this sense of urgency moving. Howard Lutnick said that he is confident that a European Union deal will be reached before the deadline, but we'll see what happens to that. So let's look at some of the latest trade news that we've gotten. So overall, the U.S. officials told European negotiators last week that further concessions are likely to be demanded to get a deal over the line. So that was a surprise to the European Union, which was thought to get this rate of 10%. Now that 10% rate looks a lot closer to 15 or even higher, and they're not happy about that. So it's preparing retaliatory measures to hit back against the United States if an agreement can't be reached under this circumstance. And this could include taxes on digital services that could be aimed at the United States tech companies. And remember, Trump had a big problem with this. So I don't know, like, does this look like things are doing real well, or does it seem like there's measures of tension building in the room regarding tariffs? Now, what about Japan? Trump has already said he doesn't expect to get a deal with Japan before August 1st deadline. So whatever he's announced for Japan, that's likely going to be it until they further negotiate this one. The ruling government coalition lost its majority in the upper house, weakening Prime Minister of Japan's position by making it harder to persuade lawmakers to back any agreement reached. So that's what led Trump to really mark off and discount any idea of getting a deal made with Japan anytime soon. Maybe in the future, but he's not expecting anything pretty soon. And then China, this is the top two. Europe, so the European Union and China are the top two that everybody's watching, and India. India is a big player, so top three there. China exports rare earth minerals, critical for electronics and batteries, and that's like the economy of tomorrow. That's really what, like, that's how I'm recording everything right now. Like, cars, phones, computers, cameras, microphones, batteries, all of that's super important to the modernized way the economy functions right now. And let's read this. These rare earth magnets surged in June as far as exports from previous months after trade negotiations with U.S. advanced. So we got this truce between the two, and maybe people's trying to front run like, oh man, what happens if they don't? So that's probably why people are trying to front run to an extent, but still volumes from a year earlier decreased 38%. China produces about 2/3 of rare earth minerals and has used its dominance as a card to trade negotiations with the White House. So we'll keep on watching this. They're going to keep on using their cards against each other, like TikTok, for example, and they're coming out with this new app. I think it was called M2, and I think it's weird that they named the app after money supply. I'm sure there's something deeper into there. Maybe they're completely unrelated, but I just find it a coincidence that that's the case. So China's using rare earth minerals and U.S. is using the consumer purchasing power, with the U.S. being the consumer capital of the world and how we buy a ton of stuff from China. And then TikTok, that's kind of where their negotiations are coming into play. And I don't know that it seems like things are going well. And also this truce between China and the U.S., it's temporary, so things can easily bounce back to where they were. And China did get a more extended deadline than everybody else. I believe theirs was like August 19th or so, or August 12th. It was something further out, so verify. It might even be August 9th, but verify that part. But I remember it being more extended than this August 1st deadline. But we've been talking about tariffs, and tariffs aren't the only issue, because before tariffs were ever the issue, what was the issue, everybody? Hopefully everybody thought interest rates, because interest rates haven't moved much from these high rates that we've had in a nice while. And what does this do? This cools demand, because people can borrow less money, or it's more expensive to borrow money. Let's look at this right here. I thought this piece was interesting. More 70-year-olds bought homes last year than did people under 35. And yeah, this makes sense. Like, yeah, they're a lot older. They've been in the workforce longer. They've been able to save more money. The older generations are more likely to appreciate the benefits of their assets increasing over time, appreciating in value over time. So it makes sense. But what we see is more U.S. homes sold last year were bought by people age 70 and over than by people under age 35. In fact, 46% of homes were purchased by those aged 60 or over. Let's just look at this real quick. That's kind of crazy. Young boomers were the highest amount of sellers, being 31%. Maybe just getting ready to downsize, and that leads into older boomers and Gen Xers. Wow. So maybe downsizing to an extent and buying something else. And like I just said, they're the ones to really appreciate the benefits of their homes, going from buying their homes for a pack of cranberries and some chips to now it's worth like $1 million just to buy a home right now. So good luck if you're a younger generation who just graduated college. You got all of this debt, barely any work experience. Jobs aren't necessarily hiring. And if they are hiring right now, they're like lowballing you just to hey, let's just get some experience. We'll read it. We'll revisit your wages and salaries and benefits maybe next or next year when things are doing a little better. So interest rates really play a toll on that. But consumers aren't the only people that borrow money, and have to pay the borrowing costs associated with borrowing money, like interest expense. So businesses borrow money to keep the lights on, to pay wages. And who else? We talk about this all the time. The government also has to borrow money and are hit by these higher rates. So this goes back to Trump and Jerome Powell's little, would you even call this, like, argument going on about what they should do regarding rates. But the tax and spending bill is expected to increase the national deficit by about 3.4 trillion over the next decade or so. And somebody has to pay the interest expense of borrowing all of that money, which goes back to why Trump wants Jerome Powell to lower rates, and that he may or may not fire the guy, but it might not go exactly how Trump's planning. For one, Trump doesn't really control the market's expectations of inflation, which really drives these treasury yields, which impact the bulk of the borrowing costs. Yeah, the Fed could slash rates to an extent, but at the same time, if people start thinking, all right, well, that's going to cause inflation, and then yields start rising, and then like it completely backfires on them. But aside all of that, why Trump's next Fed chair may not deliver the interest rate cuts investors expect, because it's starting to look like good. Oh yeah, they're finally going to cut rates. Not so fast. So Federal Reserve Governor Christopher Waller went out on a limb last week and urged the central bank to cut interest rates. Could have been him applying for the job of Fed chair whenever Jerome Powell needs replaced. But Waller is likely to be soundly outvoted by his fellow governors on the Fed board. So a lot of other people aren't necessarily supporting him in cutting rates in July's meeting. Christopher Waller's really saying, like, hey, let's cut now. We're starting to see cracks in economic data. Consumers are really piling back. The job market's like, yeah, it's looking good on the surface, but when you look deeper into it, the data's not looking too good. We've already gotten real close to our goal on inflation. I think we should just cut in July. Worst case scenario, we don't cut at our next two meetings. We could go from there, but I'd rather be early than late on this one. And when we get further into it, a lot of other Fed officials don't agree with Chris Waller. So assuming the new Trump-appointed chair would want to cut rates aggressively, let's just say it's Chris Waller, for example. For some reason, he wants to cut rates, get down to the neutral level because that's where the data is saying we should be. They would have to get 6 more Fed officials to go along. It takes 7 votes to get a majority of the Fed's 12-member FOMC, Federal Open Market Committee, which sets the interest rates. These officials won't back rate cuts just because of Trump or a new Fed chair wants them to. They want to demand data to back up the move. And right now, the data is like, honestly, the data's not looking too bad. Especially if you're just looking at the headlines, and your average Joe and Jane, like, they see the headlines and that's good enough for them. The CNBCs and the Bloombergs and then the Wall Street Journals, they just see the titles and that's good enough for them. Oh, beat. That was a beat. It's looking pretty good out there. So the economic case for a rate cut has to be apparent in the data and the forecast. And I'd imagine these Fed officials are looking much deeper into the data. And like, when, let's not say it's rigged or anything, but when consumers are looking at the headlines and they're not looking deeper into the articles and, whoa, that doesn't look good, and like putting pieces together, Fed officials could almost cherry pick some of the data they want just to kind of go into their narrative a little bit. Not saying that's the case or not, but that's just something to consider. So ultimately, the next move that we're going to see really hinges on the critical piece to the puzzle that we've gotten right now, which will be that T word, or both of the T words, Trump and tariffs and what necessarily happens with that. Will Trump strike lower deals and negotiate lower deals that are still beneficial for the U.S. and wins for these other countries? Or does he really double down tougher to try to incentivize some deals to be made? And with borrowing costs still high and inflation quietly returning, keep your eyes on Washington, because in this market, politics might just drive the boat regarding profits and the moves we go and all in between. So I'll keep on covering it. I'll be back tomorrow, everybody. Hope your day's great. Hope your week's great. And I'll see ya.